Well, I think Bitcoin's going to continue to grind up. I think the volatility is coming off of it as the industry becomes more structured with more derivatives and more ways to hedge it. Our expectation right now is end of the year, it should be about $150,000. And that's the consensus of the equity analysts that cover our company and the Bitcoin industry right now. I don't know why it won't grind up to $1 million a coin over the next 4 to 8 years. I would think not less than 4, not more than 8. And of course, my long-term forecast is it goes up about 30% a year for the next 20 years, and we're headed toward $20 million Bitcoin.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge.
Michael Saylor says Bitcoin could hit $150,000 by year's end. We'll uncover his bold reasons and market insights. Let's dive in.
I think the crypto industry has evolved over the past 12 months into two different sides. There's the digital capital side of the industry, and Bitcoin is digital capital, a long-term store of value, and digital credit instruments that are built on top of that capital. So we're accumulating the capital, and we're selling the credit. On the other hand, there's digital finance. And the digital finance part of the industry is tokenized currencies, tokenized securities, tokenized brands. And that's all of the proof-of-stake networks and all the crypto exchanges and the stable coins and all the tokenized stocks and tokenized bonds and the meme coins. And that entire business is going through a Cambrian explosion of innovation as well. I think the most exciting thing is 12 months ago, you couldn't get a loan against Bitcoin or a loan against wrapped Bitcoin like an ETF like IBIT. You couldn't get those loans from any major bank in the nation. And now what you see is that Bank of America, JP Morgan, Wells Fargo, BNY Mellon, are all beginning to embrace this asset class. You see other innovative banks, Charles Schwab, Texas Capital, they're offering pretty progressive credit terms against either IBIT, and now even many of those banks are starting to talk about offering credit against underlying Bitcoin. I think in 2026, we'll start to see some of these major banks like Citi custody Bitcoin, BNY Mellon start to custody Bitcoin, and companies like JP Morgan start to issue credit against it. I think it's all very auspicious for the entire industry. I think the entire administration has been, and the Senate and the House have all been just very, very positive toward digital assets consistently for the past 12 months. I think we've seen a lot of very positive initiatives out of Treasury. You see enormous positive initiatives from the SEC. And now you see we've got a new designated head of the CFTC who's very positive on digital assets in the entire crypto industry. I think the White House could be more supportive. So I think that this 12 months has been probably the best 12 months in the history of the industry, because what you got was the White House endorsing Bitcoin as digital gold. Then you got the SEC saying we expect that securities will be tokenized on-chain and we're going to support it. You got the Secretary of the Treasury endorsing stablecoins and saying we believe that the future of the U.S. dollar currency is to be tokenized and exported to the world, and we're going to support that. And now you've got a pro-crypto head of the CFTC. When you put that together with all the other cabinet members like RFK, like Tulsi Gabbard, like Howard Lutnick, et cetera, that are coming out with very pro-Bitcoin, pro-crypto initiatives, I just really don't think the industry could ask for much more.
Michael Saylor dropped some electrifying insights at the Money 2020 conference, redefining how the world views Bitcoin and modern finance. Sitting down with Scott Melker, host of The Wolf of All Streets, Saylor painted a bold picture of a future powered by Bitcoin, a future where digital assets form the backbone of global credit markets. He described Bitcoin as digital capital, a form of sound money that fuels scalable fixed income instruments more powerful than anything traditional finance has ever built. Saylor highlighted that major U.S. banks, such as J.P. Morgan, Wells Fargo, and BNY Mellon, are already beginning to accept crypto as collateral, a shift that could, in his view, 10x the crypto industry within 4 years. He credited recent U.S. policy clarity for unlocking Bitcoin's potential far beyond digital gold, positioning it instead as the foundation for new credit systems. At the heart of his vision lies Strategy's digital credit stack, featuring tokens like STRK and STRF, designed to generate yields between 8 and 12.5%. Saylor claimed these instruments outperform traditional bonds, offering efficiency that legacy finance can't compete with. As Strategy aims to scale to trillions in Bitcoin-backed assets, Saylor closed with a jaw-dropping prediction: Bitcoin could soar to $10 million within a decade.
I think it's, at this point, the industry is going to 10x. It's going to increase by a factor of 10 based upon activities that are taking place at J.P. Morgan, at Wells Fargo, at Bank of America, at Morgan Stanley, at BNY Mellon. It's the big household brands at Citi, right? They're the ones that are going to introduce Bitcoin and digital assets to the next billion people. I think there was only one company that was capitalized on a digital asset in 2020 when we did it. We were the first. And then there were about 10, and then there were 20, and about a year ago there were 60, and then there were 120, and now we're exploding to 250. I think it's indicative of the digital transformation of the capital markets. I think we're going to see 500 companies, then 1,000, then 2,000, then 5,000. Eventually, I don't know why every forward-thinking company wouldn't start to hold some digital assets on their balance sheets. So I think it's an idea as time has come. I think it'll be good for the entire industry, the digital assets industry. But I think it's also good for the 50,000 publicly traded companies that aren't capitalized on digital assets. It's like saying, well, I've noticed 250 companies have the internet and have a website now. How many, is that good or bad for you? And I think eventually every company has electricity, and every company has a website, and every company will have digital assets, because there's smarter, faster, stronger ways to create shareholder value. Well, I think that if you look forward, you can see that there's 1 billion AIs that are going to want to do business with 1 billion AIs representing you and me and 8 billion people and 400 million companies. They're going to want to do that business at the speed of light. They're going to want to be trading 1 billion times an hour, not 1 million times a second. They're not going to have any patience for 20th century techniques. They're not going to want to wait for a week for a wire to be transferred. So I think it's inevitable that you're going to see stable coins, especially US dollar-backed stable coins, that are going to explode from it was $100 billion business a year ago to 250 billion to 500 to $1 trillion to $2 trillion. Eventually, I think there'll be $10 trillion worth of stable coin moving at the speed of light, millions of times a second. And I think that that'll be the medium of exchange in the digital economy. And then I think the store of value, the capital asset in the digital economy, will be Bitcoin. These AIs are going to want to capitalize on Bitcoin. If you want to release something into cyberspace and have it live forever, how are you going to capitalize it? You're going to load it up with some Bitcoin. The Bitcoin is going to continue to appreciate in value. So you don't need to be a person to own Bitcoin. And you don't need to be a person to move stable coins around. And one thing I'm sure is that people are not going to think as quick, and they're not going to be as smart, and they're not going to work as hard as the robots and the AIs are. So it'll be a digital economy on digital rails with digital currency and digital capital, and that, again, is auspicious for the industry, but also it's good for the human race.
Gold has slipped below the $4,000 mark, sending ripples through global markets. But for Bitcoin, the story looks entirely different. While the precious metal faces its sharpest 7-day drop since April, Bitcoin is quietly gaining strength. The timing is striking. As gold-backed ETFs saw $4.1 billion in outflows, U.S.-listed Bitcoin ETFs attracted $839 million in new inflows, signaling a clear shift in investor sentiment. Traders appear to be rotating away from traditional safe havens and into digital assets, betting on Bitcoin's growing dominance as a store of value. The move follows renewed optimism in global markets after Donald Trump's positive comments on U.S.-China trade relations. As risk appetite improves, Bitcoin has rebounded nearly 7%, holding steady above $101,000 support. Analysts now see a strong case for Bitcoin reaching $150,000 by year's end, with JP Morgan projecting $165,000 in 2025. Gold, however, isn't down for the count. Despite its correction, it remains up 50% this year and could rebound to $4,250 by December. Still, with investors increasingly drawn to Bitcoin's performance, the digital gold narrative has never felt stronger. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video. Until next time.